Is the regional bank run getting worse in the US? Is it spreading to other countries? Are people pulling more deposits out of banks? Basically, is stuff getting worse? There is one price chart that tells us if the market's getting better or worse and what to do about it. Okay, let's get to that. Hey everybody, this is RC Peck, and this is my weekly video for Fearless Wealth where I talk about what I think is most important for people to make sure they are retired strong or can retire strong. Now, there is a banking crisis going on, and it is not going away, and it has not yet gone away. I'm recording this during market hours on Thursday. Yesterday, the Fed increased their federal funds rate by 0.25%. So their focus is still on fighting inflation, even as we're getting the worst bank failures in since 2008. So there's a lot of instability happening, and it's just not regional banks. So what I want to do is I want to show you the one price chart that I'm watching to give me really the direction of which way the market is going. Because if we look at just the whole market, there's so much in there that it may not give us the answer. So I'm going to jump over to the price charts, and we're going to look at that one chart. I do want to show you a couple other charts, but I'm going to show you the one chart that's really telling us everything we need to know. Okay, so let me jump over to that. Okay, so here's the price chart right here. It is the price chart of KRE. It's the Spiders S&P Regional Banking ETF. Whew, that's a mouthful. Okay. Now, I'm zoomed in on this, so this isn't that big of a time frame. Let's just look how long. This is 8 months. And things are not looking good. So your brain can probably, and I want you to see down here, the market, or at least KRE regional banks in the US are breaking down. This is not good. So this is the lowest they've been. Now, if we go and look at March 9th, which is kind of the day before all of this happened, we start to get an idea of how bad this is because of how bad the market is falling. So since that March 9th, regional banks are down about, I have to squint to look at that, 26%. Now, if we look at this from just the beginning of the year, regional banks are down about 27, 28%. So things are getting worse. What this means is people are starting to figure out which parts of the market to avoid. Now, I can show you a lot of different regional banks, and you're going to see very similar stories. So here's First Republic right here. It is down for the day. Now, it is at its low, but still not looking good. Here's Zion, which is also saying things are not good. It's down, as I record this, to 10%. On the day. Here's CMA, same thing, breaking down. You have all these different types of banks all over. Here's Key. I mistyped that other one. Key Corp, that the same thing's happening. So it's not just one regional bank. It's regional banks within the US that are still breaking down. Now, here is the financial sector itself. So the financial sector is still holding above let's call these the March 17th lows. But here's what's interesting to me. What's interesting is, what are the banks that are being protected? B of A, but look at B of A. B of A is absolutely just broken through that. Now, the one chart I wanted to make sure I show you was KRE, and it has broken below. What I'm saying is other parts of the market are starting to break, especially this is a tier 1 bank. This is a bank that the government, US government, said, we will protect it. And yet people are moving their money out of it. Here's Wells Fargo. People are saying, you know what? I'm out of here. So those are 2 of the 5 biggest banks in the US, and people are getting out. If we go over to Europe, we have UBS, which basically the Swiss National Bank gave them a lot of money to buy Credit Suisse. It popped, it was looking good, but that price is turning around. If we see UBS break below here, that means it's really starting to spread, right? It has to hold. The part of the market that I wanted to show you was how, and I've talked about REITs before, commercial real estate. Commercial real estate office REITs are not looking good. This is Boston Properties right here. That's looking really, really, really bad. If I kind of zoom out, it's below its COVID low. So it's not just a regional banking thing. This is a bad investment thing that is going on in the US, and it is moving throughout other parts, meaning it's not just staying within KRE, which is regional banks. It is moving out. Now, here's the crazy thing. Here's the S&P 500 just kind of going sideways, not doing it, not minding its own business. Then you've got the Qs, which are not only just minding their own business, but they're actually moving up. So we have this market. One is saying one thing, one is saying another thing. Eventually, one of them is going to be wrong, right? If regionals keeps imploding and then it moves to REITs, right, commercial real estate, is going to be very hard for other parts of the market to move higher. Okay, so let's talk about what it means for your portfolio. What does it mean for a safe retirement, great income? So a couple things. When you have this level of instability in the market, it is gonna start spreading, right? There's never just one cockroach. Now, the main chart I want to show you was KRE, that regional bank. But I showed you B of A and Wells Fargo. Those are the two of the 5 biggest banks in the United States, and they are breaking down. So this financial panic, it is starting to move to other parts of the financial market and other areas. So it is also moved into real estate. I showed you one price chart of Boston Properties, BXP. That is not looking good. In the past, I've talked about Blackstone and how they defaulted on about a $550 million loan and how their B REIT kind of became illiquid last year, and they were fencing people getting their money out. They were limiting how many people were getting their money out at one time. So that is not over. It is increasing. But so far, the S&P is just kind of saying, yeah, okay. The Qs, NASDAQ 100, they're going up. And net of everything, if this financial regional bank, CRE, commercial real estate, continues to move and expand, it will start to weigh heavier and heavier on the market. Let me know where you think I got it right, where you think I got it wrong. Please like, subscribe, leave a comment. All those things matter. And if you find yourself worrying about your portfolio, you don't have to, right? Just because the market is going sideways, just because financials are falling, just because banks are failing, just because commercial real estate looks to be failing, doesn't mean you have to take it on the chin. You don't. We at Fearless Wealth have a very almost agnostic way of looking at the market, where we are responding to what is happening and not looking at your risk tolerance questions, or those questions you answered on that Tuesday, 7 years ago. Yes, your risk tolerance is important. Yes, how much income you need and want is important. But what is most important is to move with the direction of the market. That is what's most important. I'll leave you with this one thing that I just heard, which was kind of funny. Incoming artillery, incoming bullets, right? Incoming fire always has the right of way. So if you're in war, the incoming fire always has the right of way. What am I talking about? Just really quickly, the direction of the market, the direction of what you own has the right of way. If gold is doing great, by the way, gold is starting to break out. It's above its 2011 high. That tells you something about where money is flowing. You want to have your portfolio be responding to what is happening, and not these risk tolerance questions you answered so many years ago on a Tuesday that have nothing to do with the market. If you're curious about that, you can get on our calendar. We could do a portfolio review. You can look at that in the comments. Thanks, everyone, for being in my world, and I will talk to you next week. Okay, bye.